and a great singer. All right, that's a fun song to play an electric guitar for the fellow guitarists out there. So good morning, active traders, and welcome to our live room here at our live session, Trading Week Ahead here at Trade Mastery. Good to see all of you here. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold. Do see me when I'm able to speak at the Money Show events. It's always great to be part of those. Highly recommend those as well. That's me and Bollinger and Sosnov and a lot of people out there. All right, well, let's go ahead and get underway with our session. We'll start off by taking a look at the market, and then we'll look at some specific charts and answer any questions you may have. So, will the market keep going up? We don't know. We don't predict, we react. We had a 2-candle sell-off drop here, a hammer bounce. We're currently right under the resistance at 3160. Now, the expectation is that oftentimes December is the best month of the year for a variety of reasons, but that wasn't the case last year. And so with trade war tensions with China and other economic headwinds, it's anyone's call as to whether or not we're going to get a new run up or if we're going to get a little false breakout and a drop. But our dominant pattern is up, so we have to be bullish with the market continuing to race up to new highs. Now, the way that I like to look for profit opportunities is identify which sector is the strongest, one or two sectors. Currently, as it has been for the last couple of months, that's biotechs. That's a better chart pattern than the S&P. Look how clean and consistent it's ran compared to the S&P chart. So if you're looking for good trade setups, as I cover for my members in Swing Scans and my live trading the open room, we're looking for dominant plays in the strongest sector. We've got institutional money flow. You know all about high frequency trading algorithms and the rise of the machines and all the dominant software algos that put money in and out of the markets. The main thing you as a trader want to do is identify where the money is headed next. Like I was mentioning, we had so many winning alerts yesterday in the live room, and people are asking, how do you get so many calls correct ahead of time? And the reason is you have to think a step ahead, like playing a chess game. If I do this, what's the opponent likely to do? What would be my next play? And then checkmate. And so what you're doing as a trader is figuring out where the next money is likely to occur. And it's where the previous money had been trending. So we'll see if we get continued volatility in our biotechs. In terms of our VIX, which I want to continue covering as well for you, we had the pop last week, right? Monday and Tuesday, we had the big market sell-off. But then Wednesday, Thursday, Friday, the market recovered and our VIX is dropping back down under the 50 SMA. The key level to look for, and this is very valuable, this is something I cover using a variety of indicators for my live room members, is if we get back over the 200 simple moving average in the VIX over 15, we've been in a 12 to 14 channel the last couple of months. It finally popped up. That's kind of a warning shot across the bow of the stock market that there is some selling pressure out there. So if we recover, the tip for next week is make sure to keep a keen eye on the VIX and scale out of open long positions if the VIX gets over 15 and look for potential shorts or buying, if you want to buy puts in your options for weekly options, or if you're trading the VIX ETNs like VXX and UVXY and TVIX or whatnot, the place to do so, or the day after in which to do so, would be if the VIX pops over 15. That's a smart professional trader's approach. Pro traders are always enormously preoccupied with the VIX because that's our volatility index. My colleague Larry McMillan did a brilliant presentation. I learned some things from him too when we did a webinar week before last, and look for the replay on my YouTube channel at youtube.com/trading television. So what's hot? What's moving? Well, let's see, if we take a look here, you can see CVS had been a big runner for us. We had a bearish engulfing, so we don't want to buy unless it breaks out a new high. I had a bearish engulfing, which is bearish, and then a hammer, which is bullish. So the technical signal was a buy right over the hammer high. In this chart, I'd wait for 77 to get over that before looking for a continued move up. But it had been a nice, consistent runner for the last 20 points or so. A couple of small caps, INSG is one that my small cap scans members were alerted to earlier, and it ran up nicely for them. So congratulations to all of my smallcapscans.com members. We nailed it for you guys here. Big honking day yesterday. Nice for it. A nice 50-cent run. We'll see if it's able to continue on up. This illustrates another pattern that's been especially valuable that hopefully you can profit from in our current markets, and that's looking for large green candles, of which you have at least 70 or 80% of the last week's worth of candles are large and green. Large and in charge. Jolly green giant. Ho, ho, ho. But unlike vegetables, we want steak, right? With things that actually run. So we'll see if this guy's able to race up. Another small cap runner for our live, for our small cap scans members was ATRS, and it ran up nicely with a 45-degree angle breakout, kind of chopping around up here, but worth keeping on the radar for a new move up at new highs. Now, if we look at some of our ETFs and we look at things like TQQQ, they've been like the S&P, much less certain in their breakout. Back in October, this guy was down at 60. Now it's up near 80. So TQQQ on the upside, SQQQ on the downside. One pick I want you to pay attention to is Gush. They did a reverse split. It had been $2 or $3 a share. Now it's $20 a share. Gush and UWT. Normally I trade UWT myself. I've done so well with it. But it's kind of choppy, and there's not as many points in terms of trade potential in it. I'd called that long right over 10 for you guys earlier, and then the exit, I called it long at 10.50, and then the exfil was military talk, exfil. Our extraction was right under the decade value at 19, right? We always sell 9. So it did keep running on up to the 200 SMA at 24, but it dropped. But now it's back, coming back to life. What I like about it is we got a couple of bullish lower shadows, and we're in a channeling uptrend. And friends, that's another thing to pay attention to is, if you're looking at swing trades or trades for even longer, oftentimes I'll put on a trade that may last 2 months or so because of the consistency of the charts that I like to trade. As long as the trade continues in a trading channel that's in an uptrend, I'm going to stay long, right? I may scale in and add to the winner, and ones that trend downwards you scale out of. But anyway, the point is we're in a nice steady uptrend in UWT. It's how to play the crude oil bounce long. I like Gush better. It's one of those highly volatile instruments, but look at the profit potential. Back in April, it had been split adjusted 140 a share, now on sale for only 20 a share. So remember I said this, and the breakout triggers are going to be just above the 50 simple moving average, just above the 100 moving average, and eventually if it gets over the 200 SMA as well. So what I like is the big volume on the pivot here. We've got substantial volume, 3-month high volume on this guy. So see, it did a reverse split. It had been like $2 a share. Did this. It's making a slow, shallow, bullish cup, but it's been on the uptick ever since Tuesday, right? Tuesday, Wednesday, Thursday, Friday. We're in a continuous small uptrend. That may hockey stick into an acceleration ramp, which is where we have a steady uptrend that does a 45-degree angle breakout. So eyes on this guy if he breaks north of 27, 28. So many good trade setups. I don't know if your experience has been anything like mine. The challenge is always figuring out how to narrow your focus to the strongest charts in progress. So whether or not we're trading small cappers like this, or we're trading our ETFs and day or swing trading, you really want to look at where the money flow is strongest. Another thing, a good strategy that I think can help you, is to look for price points that are likely to attract new buyers. Often when traders ask me about specific entries, they will almost always look for entries that are too soon, and they get in too quickly and then they get shaken out on a pullback. You're going to be a little more conservative in your entries. Ask any Wall Street trader. It's always, slow to enter, quick to exit. There's probably an off-color joke in there somewhere, but I won't go there. But you want to wait until not until it breaks above immediate resistance, because often that's a false breakout region. And if you've seen the success rate of my live alerts, For example, this was a chart that one of my very smart traders, John, who almost always produces winners. So thanks, man. Good teamwork in the live room. Yesterday, John brought this to our attention back when it was, I think, back here near 22, 22 and a half. And I said, yeah, that's a great chart. Continue to go long above new highs. And I gave specific entry triggers for everybody. Now, do you see how much more money you could have made day trading this chart than those inconsistent $3 low flow biotech, pop and drop crappy stocks? It's much better as a day or swing trader to go for consistency. Go for charts that have consistent price action and are likely to continue to run up. Okay, so that's a rock star chart. Also to pay attention to this next week. I'll be trading this one myself too if it takes out new highs. It ran from 20 to 25. And again, we don't care about the name of the company or the reason why it went up. It's more buyers and sellers, right? You have to ask yourself, as the great Tony Robbins says, if you want to improve the quality of your life, you've got to ask better questions. And that's very true. You got to ask not if, but how type of questions. As a trader, we're trying to seek as much profit as we can with as cheap stop outs when we're wrong as possible, right? You've got big stops, small stops, big wins, small wins. Most traders are in the big stop and small win category. And if that's you, don't worry, that's where we all start off with. You've got to get rid of big stops so that all you're left with is break-even stops or small stops, which I'm an expert at. I do thousands of them. And by that I mean on a swing trade, no more than $2. So if I'm in at 22, if it gets under 20, I'm out. For day trades, no more than 40 cents. So if I get in at say 22.20, 21.80 is going to be my stop. And often I'll use tighter than 20 cents even. So the charts like this make sense to trade. Another good chart is Micron. And before we look at that, let me do a quick commercial announcement here. My best offer that I've ever offered in the history of my company is now underway, where you can get my all access pass for just $9.97 plus $1,000 worth of downloadable courses, all for just $9.97. So you get to join me 6 days a week for webinars. The swing scans ones, which we do in 15 minutes from now at 10:30, and then the live room every day from around 8:45, 9 till 10:30. So you can join me for over 390 hours of live webinars for just $9.97 plus you get $1,000, your choice, either $1,000 worth of downloaded courses or a private phone call with me. You can bend my ear and I can give you straight answers for questions that you might have about your own personal trading issues and challenges and how to overcome them. And there's no back end and there's no upsell, guaranteed. So this is not like you buy this and it's such a great deal, but then I try and sell some $10,000 hoo-ha platinum mastermind coaching. I don't do that. This is everything I have. I give you my best. So it's underpriced and it's a great value. So take me up on it. You get live room access 5 days a week. You get swing scans. You get breakout mastery. You get small cap scans, plus $1,000 worth of downloadable courses. And it's a great, honest offer. It's the best offer I've done in the history of my company. You're getting hundreds of hours. When I speak at Money Show events, they do the premium things where people pay $329 to see me for 4 hours. Well, that works out to about 50. What is that? 4 goes into 320, $80 an hour. This you're getting over 400 hours with me for a fraction of that. So it's a great deal, and you can get to it at trademastery.com, all access. And of course, there's details and preview videos and explanations down on the page. Deadline is Christmas, so give yourself a holiday bonus. You have my word, it's a great deal. It's worth it. Totally worth it, because you get me for a whole year. If you could take it, 6 days a week of webinars with me. And a lot of it's recorded too. So for my live room members, I do record from 9:20 till 10 o'clock, the most important part of the morning, and put those videos in the download area. So that way, if you miss a day, I do so much education and training and pattern recognition and timing skills and live specific alerts with my alerts table that shows you specific entry prices ahead of time, unlike any other room in the world. That's why I've been around for over 2 decades. We're not like the, hey, it's a $5 stock, I'm going to scalp in thousands of shares. You don't do that. That's not how to day trade. You want to have specific charts that make sense. So that's my pitch, and it's gone. Boom. Anyway, back to our regular scheduled program. Live from New York, it's Saturday. No, live from Colorado, it's Saturday morning. Anyway, great to see all of you here. Big epic turnout. Over 5,800 of you have registered for this shindig. And by the way, if you have, as a take care of my traders and earn your loyalty and your respect and your trust, anybody who has ordered the All Access Pass anytime, from, I guess, June till now, you will also get the $1,000 worth of courses as my Christmas gift to you. So I wanted to thank all the hundreds of you who've been my live room and other members. If you are an All Access Pass member, I got your 6. I live here near the U.S. Air Force Academy and Fort Carson on the south end and Peterson Air Force Base and NORAD. So got a lot of buddies in the military and law enforcement. And I have so much respect for people who do things straight, which I do. So if you've been if you're a current All Access customer, I'll also give you $1,000 worth of courses as my gift. No strings, right? So good, honest offer. So that's why I've been around 21 years. I don't charge $3,000 for courses that people only get access to for a few months or BS like that. I give you downloadable, high-resolution courses you get to keep forever, right? So plus live interactive training, and you can ask questions. And I'm not going to have time to do a lot of Q&A today in today's event, but if you have any questions about the offer, send me a support ticket. Anyway, back to chart patterns. This is an interior gap, an inside gap. Not as good as a 2-day high gap, not by a long stretch, but what we've seen is a lot of the 2-day high gaps have been inconsistent this year. So though that's a 20-year favorite pattern to buy above the previous day's high with a small 50 cent or $1 gap, that's my hallmark gap and go trading strategy I've taught the world's traders for 2 decades. Widely copied out there, but I'm the originator of the gap continuation patterns for intraday traders and tape reading patterns that I teach as well in the live room. This is the second best, which is an inside gap, where you've got a gap up above the prior day's close, but still yet inside the previous day's range. The long signal, again, is still above the previous day's high, up here, say 47.6 or so. You could exit into the whole number right under the 48 whole number. We always use whole numbers as key resistance and support levels. If you saw my article in my award-winning articles in Stocks and Commodities magazine, I outlined that with a Twitter example back when it was 30 a share or something, where still 30 a share, was up to 40, then a gap down, and now it's back at 30. Anyway, gap continuations make a lot of sense to trade, and I'm an expert at that, and I like to teach you that. Now, in the live room, I do still cover these cheap, horrible stocks that some people like to trade. This one, my members alert, when it was here, I said we go long at 220, and we exited live. I told everyone we want to sell at 240. So, for a $20 or $2 stock, a nice 20-cent plus win was good before the market took back the moves. But I don't like these kind of charts because they're inconsistent, and good point from Bob, some of these kind of charts you'd get stopped out in, which is what happens with cheap charts. Now, I made the correct calls for my members, but it took a lot of experience to get there. It's enormously easier to trade fewer shares of consistent charts than large 1,000-share plus of the cheap, horrible, low float, under $10 BS charts that some of these morons are out there promoting. So, think of how much money you can make with this kind of chart, right? So those are the kind of things we want to look at. Let me see if any questions before we wrap. I don't think so. Let's see. Hey, thanks, TJ, saying he loves my jokes. And absolutely, Bill, that's what I'm going to do. He's asking if the VIX pops above 15, take a run with the inverse ETFs. Yes, but the way that I do that is maybe 50 share blocks at a time. And also SQQQ and SOXS. Those are my 3 favorite bear plays, are SOXS, the inverse semiconductor leveraged ETN, SQQQ, and UVXY. Those are my 3 favorite bear plays. And so if the VIX pops over 15, I guarantee I'll be trading those on large size. I've been as much as, for me, large as my 25 grand overnight. So currently I'm looking for new plays in continuation moves. But yeah, if the VIX pops and holds over 15, I'm, at least personally, I'm going to be scaling into the inverses, because who knows what the market holds? Who knows? The shadow knows. Anyway, thanks for smart questions. I appreciate it. let's say a trader. Hey, John, saying you're looking at Bank America, FAF, RF, Sony, NAVI, SEM, SWKS. Oh, hey, thanks, Phil. And I see more and more companies are starting my way of dealing honestly and open with education products, always the leader. Thanks, Phil. Appreciate it, man. I was a former corporate training guy. I worked with a lot of Fortune 500s and done a lot of quality improvement, team-based TQM type, total quality management things with Fortune 500s. It's always important to be straight with people, and so that's how I build my brand. It's so much sketchy stuff out there in the trading education industry. You got to look for those few of us who play it straight, which are typically those of us who've been around for a long time. You know, don't trust these guys under 30 or something on Instagram that are constantly all over the place pushing stuff. Trust people like at my worldstoptraders.com site that are established experts like, you know, Price Headley and Steve Nissen and Tom Sosnoff, and Harry Boxer's brilliant. I'm a big fan of Harry Boxer. He's really sharp. You know, a lot of good people out there to learn from. Invest some of your commission saving if you're a US-based trader with a commission-free broker, which I recommend. Ameritrade is my favorite, and Fidelity would be second choice, and Interactive Brokers third. Those are the three top brokers to use. Ameritrade's leading the pack because you get free commissions and you get Thinkorswim for free. It's like, wow, what a deal. Ameritrade. I use Fidelity. I got accounts with both. Actually, I have accounts with all three and with Interactive Brokers. So, but of the three, my current favorite is TD Ameritrade. So, you know, get a broker that makes sense. And sign up for my All Access Pass. You know, it's a great deal. You get over 400 hours of training with me, plus $1,000 worth of courses for less than $1,000. So it's a great deal. You have my word on it. That's why I've done quite a few $1 million worth of sales over the last 20 years I've been in business, because I earn and keep people's trust. I'm not out there charging $3,000 for courses or trying to pass off pop and drop cheap stocks as making thousands of dollars a day and all that kind of crap that's out there. I like to play it straight, play it smart, be safe out there as a trader. And I want you to have an outstanding holiday season. I wanted to wish you all the very best. I got swing scans coming up momentarily, so I've got a jet. I got to bounce. I've got to say, peace, I'm out. You guys take care. Sign up, crushwallstreet.com. And let's try and do that, right? Go to www.crushwallstreet.com. That'll forward you over to trademastery.com/all access. And that's where you can sign up for the whole year with me for a great deal. You're getting hundreds of hours of webinars with me, plus $1,000 worth of courses. So it's a full rebate on the price of the all access worth of courses in addition to that. So that's it. Be safe out there. Play it smart. Remember, like Sosnoff says, trade small, trade often. I say trade wide, not deep. Play the field, you know. Imagine you're at a Vegas buffet instead of at a fancy steakhouse. I mean, they're both good, but as a trader, it's much smarter to take the buffet approach and throw a lot of darts at the market with small under 100 share positions. And if you're a newer trader, under 20 shares. You know, if you got less than 5 years experience, I know it's not thrilling, the prospect of, you know, not making a fortune overnight, but that's not how trading works. It's like any professional skill, whether it's engineering or being an airline pilot. Like, I've got a lot of customers as pilots lately, so that's kind of neat. We got wheels up. Play it safe. Anyway, I've got swing scans coming up momentarily. And again, for all of you who joined All Access anytime from the middle of the year from June on, you'll also get the $1,000 worth of courses. So Merry Christmas and Happy Holidays to all of you. Take care. Register now if you're not yet a member, and I'll see you on the other side. Oh, you're welcome, Vincenzo and Oksana and TJ and Wendy and John and Bill and Ahmed. Hey, Ahmed, how you doing, man? And I'm entertaining. I try, right? I'm not as entertaining as the Kramer, but I tried to come in second place, so we're second, so we try harder, right? Anyway, you guys take care. Be safe out there. You know, play as a trader. With all the things I've learned in millions and millions of dollars of trading in my biggest winning years and my disappointing stop years and everything else, it's when in doubt, get out, play it safe, wait until you got volume confirmation on 2-day high breakouts, Play the field. You know, when I day trade, it's usually anywhere from 5 to 7, as many as 40 or 50 trades a day, but as few as 4, 5, 6, 7 trades, not one. You don't just pick 1 or 2 charts, because you're going to get screwed if you try and do that for day or swing trading. And to play the field. Like if you're a younger person or whatnot, or if you're out there dating, you don't just go out with one person and then marry them unless they're really, really special or whatnot. You want to go out with a few people or go to a buffet and eat a few different courses. As a trader, you want to play the field and give yourself the odds of being successful by not putting all your eggs in one basket and not over trading, not putting too much. My own mistakes have been often if I think I've got a sure thing and I'm betting like 400 or 500 shares on it, that's not how to trade out of the gate. You want to start off with maybe 100 shares at a time on 5 or 6 different instruments. Expect you're going to get stopped out at least half the time. How do you still make money being stopped out at least half the time as a trader? I pretty much guarantee that you will never be more than 50% right in your trades, no matter who you follow, no matter what you get at in life. Ask any floor trader, ask any CBOE or New York market maker specialist. That's not the question to answer correctly. The question to answer correctly is, how do I freaking make money in the stock market? And if you're wrong 60% or 70% of the time, but on little itty bitty inconsequential stops like I take, big deal that you don't care. You give yourself more chances to get it right by taking really, really tight stops. And like I've said, for 20 years, trade wide, not deep. Not ridiculously, you don't have to trade 50 or 60 instruments, but do diversify and give yourself a chance to scale in on your trades and play those are your 2 strategies. Scaling in, so small initial, then double down if it proves itself. A swing trade that runs up a couple of points, a day trade that's up 30 or 40 cents in your favor. So that's one strategy, is position sizing and scaling. You don't put on big, what did Kramer say? Something like, I forgot the name, but you don't put on big trades right out of the gate. You put on small trades and then feed the winners, starve the losers. That's my phrase. And then play the field. So you're combining the best of both worlds. Small initial upfront risk that's diversified. That's exactly opposite of how a lot of traders do it. They'll find a magic chart pattern with 1 or 2 charts and play too much size and get shaken out. And then add insult to injury, it'll often run without you once you get stopped out. So break your trades up into small pieces. Get out there and make some money. Let's trade smart. And join my event, crushwallstreet.com, for the All Access Pass. See you guys next week. Be safe out there, right? We've got the holiday drivers that are a bit risky, so be safe, and I'll see you guys next time. Take care. Yeah, Mark's saying I'm Avis to Kramer's Hertz. Okay, appreciate it. I don't have anywhere near his viewership. I've only got 5,800 people. He's got probably millions, or at least many thousands, but more thousands, but doing my best. Learn from people who know what they're talking about. Play it safe, and best wishes for success and a profitable end of year and a happy new year ahead. See you guys next Saturday.